December 17th, 2024. Today we had a big gap down and then more or less went sideways for the remainder of the day. The daily range for the past couple of days, maybe 5 to 6 days, has been really rather small, maybe more than 5 to 6 days. So, how many days is this? Let me just check. So, for the past 9 days, we've had a really, really small range, just 20 to 30 point bars on the daily chart, which is not overly normal. The day started off with a big gap down, and in general, big gap downs should get second legs. So, as tempting as it might be to buy 3, 4, and 5, and not only is it tempting, it's probably fine, right? It's fine to buy the close of 5 if you want to and take a chance that we get a little bit of an upside breakout. You also have to keep in mind yesterday's low is right here. So, if we reach this, it should get a second leg. But if you think of the big gap down as a giant bear bar closing near its low, I'll just highlight it on my chart and make it look that way. So if you look at it like this, how tempting is it to buy these now? Well, now you probably don't want to buy 3, 4, and 5 as much. So it's easy, and yes, you can look at the Globex overnight and trade it that way. I personally don't usually do that. I usually just think of this as a big bear bar closing near its low or on its low. And so are 3, 4, and 5 as tempting to buy if this gap down is a giant bear bar closing near its low? Probably not. You see that giant bear bar closing near its low, what are you probably thinking? You're probably thinking that it needs a second leg. Bar one, a bear bar, but a large tail on the top and a large tail on the bottom. So probably sellers above, scaling and higher. Again, it's follow through for the big gap down, but I'm not sure how much lower we're going immediately. Bar two, an inside bar, a doji bar. For the bulls, it's a high one. They're hoping that the big gap down and the follow through bar on one is a bear trap, and that there's that there's buyers above two, and that this is the low of the day, and that we just start the beginning of a very large swing up. What are the odds of that? I don't know. Probably not very high. Probably still a 20% chance that two is the low of the day around the close of bar two. So not really that great to be buying the close. Three, a bull surprise. Three is big enough to get a second leg sideways to up. So you have to think that we're probably going at least a little bit higher. Four, consecutive bull bars. Good for the bulls. Again, there should be buyers below four or below four if we go below four, or around the two high if we get there. So good for the bulls on four, and then another bull bar five. It's a big, small, big pattern, 3, 4, 5. Probably going to pull back first, but probably also going to get a second leg up. An outside down bar on bar six, but 3, 4, and 5 is strong enough for a second leg. So it's possible that we get that second leg before we go down too much further. I thought the traders who bought below 5 and were willing to scale in should be able to make money. Something pretty important happened early on in the day. We formed an open gap it's really subtle, but the 5 low and the 7 high. A bull who bought below bar 5 should be able to make money. Yes, we should still get a second leg from the gap down, but after 3, 4, and 5, it's more likely that we go sideways rather than just straight down. So I think there probably should be buyers below 5, scaling in lower. And you can see the traders who bought potentially trapped on bar 6, but probably still okay to hold through bar 6. And then bar 7 starts collapsing. So the traders who were long are now trapped with 7 collapsing and closing near its low. And again, we never even got back to that bar 5 low. So I think that is potentially trapping in a lot of the bulls. 8, an inside bar, a low 1 short. Low ones are generally only reliable in trends. And could this be 3 bull bars, 3 bear bars, and sideways? Yeah, absolutely. Could it be a bear trend? Yeah, I think it could also be a bear trend. So it's difficult to short here, and you have to have really good calibrated expectations of what you think is going to happen in this trade if you're going to sell below 8. 9, another bear bar, probably good for the bears who sold below 8. Now we have 4 straight bear bars, 6, 7, 8, 9. 3, 4, and 5, still pretty strong, but with the open gap, which means we have trap bulls and the big gap down, I still think we're probably going to go at least a little bit lower. However, if you're selling down here, you have to realize what you're doing. You're selling betting on a bear trend. So if you're selling below 9, you're basically betting that this is going to be a bear trend and that we're going to get a measured move down and come somewhere down here to around 6,100. If we are going to get a bear trend, it should be a small pullback bear trend. And small pullback bear trends do not have big bull bars that need second legs. So bars like bar 14 do not exist in general in small pullback bear trends. And so it's okay to sell below 9. And as long as we don't get a bull bar, a good looking bull bar that's pretty large, that should get a second leg closing near its high, such as bar 14, I think it's okay to stay short. So I did sell below 9, disappointment 10, a doji bar, And then disappointment 11 consecutive doji bars, but still no bull bar closing near its high. So still valid to think we're possibly in a small pullback bear trend. However, consecutive doji bars is obviously not usually the follow through that you want. 12, a bear bar closing near its low. The bears are hoping this was a spike down to bar 9, and then disappointment on bar 10, which is the start of the pullback and the bear channel. And they're hoping that we basically get a channel down for the remainder of the day. 13, a bull bar, but a large tail on the top. Probably sellers above, willing to scale in higher. And then you get 14. So what about, I did exit above 14, like I said, because this should not be happening if this is a bear trend. If it's a bear trend, it should be a small pullback bear trend, and we should end up just slowly drifting lower and grinding down lower. And instead, we're getting a big bull bar closing near its high. That's not what you want to see. So it's okay to exit above 14. And since it's okay to exit above 14, a lot of traders would actually probably buy above 14, taking a chance that we're going to go higher. 15, a doji bar. So disappointing follow through for the bulls who bought, or the traders who bought above 14, but still okay to hold. What's one of the reasons that I think it's okay to buy? Well, think about it. What does 14 say? 14 says it's probably not a bear trend. If this is a bear trend, then we should go lower and we shouldn't get that bar. And since we did get the bar, it's probably not a bear trend. If it's not a bear trend, it's a trading range. What happens in trading ranges? Gaps close in trading ranges. So I think this gap will close. High closes get tested. High bull closes, right? Bar 5 close, probably going to get tested. Bar 5 low, probably going to get tested because these are open gaps. And in trading ranges, gaps are going to close. So it might not go straight up. It did pretty much go straight up. It doesn't always have to go straight up, but we are probably going at least a little bit higher. 16, a bull bar, but a large tail on the top. We're probably still going higher. We'll probably drift a little bit higher at least. 17, another bull bar, but a tail on the top, a tail on the bottom. Maybe not straight up since we had so many bear bars and a good looking bear channel leading up to this. But again, we still should go higher. Probably buyers below any bar. We have a micro channel since bar 12, and now it's bar 17. And then you can see on 18, we traded below 17. We found bulls buying below 17 because that's a bad low one short, right? If you're a bear, you don't really want to sell below 17, taking a chance the bear trend is going to start collapsing. Instead, we found buyers below in an outside up bar on 18, closing near its high. A tail on the top, a tail on the bottom, but still outside up, good for the bulls, increased chance that we're going to go close these gaps. 19, another bull bar, touches the moving average. And initially, there are some bears selling, but the bull channel is really tight. So you have to expect if we do pull back, we're probably still going to get up into this area. And then a bull surprise on bar 20, a large bull bar. Are we probably going to get a second leg up from bar 20? Yeah, 20 is strong enough for a second leg. I thought that you could buy up here, but it was risky to buy 20 in case it turned into a bull trap. And I think one of the ways to make it less likely that you're buying a bull trap is to wait to see if bar 21 is also a bull close. And so for me, with 4 straight bull bars, bar 21 was also a bull close, and it was probably reasonable to buy up here. Granted, the whole day kind of ended up being an expanding triangle, and expanding triangles are the most difficult for the way that I trade. Expanding triangles are the most difficult type of environment to trade in. But 21 being a bull close increased the chances that we're probably going at least a little bit higher. However, it's still probably somewhat trading range price action. So I did buy that close, and I ended up taking a loss. I got out over here. I sat through all this though, basically taking a chance that this was a bull flag. And once we started to break below here, you can see I thought it was 1, pullback 2, pullback 3. And so once we started to break below here, it was less likely that it was a bull flag and more likely this was evolving into a bear trend. So you have to work a lot. The big key to trading, I think, at least, is working on when a bull flag becomes a bear breakout, and when a bear breakout becomes a bear channel, when a bear channel becomes a trading range, when those trading ranges become breakouts. So as I was saying, 21, a bull close, good for the bulls, but we're probably going to pull back. When you have a really climactic bar like this, you have to be expecting a second leg, but you also have to be expecting a pullback. Where do traders buy? A lot of them are more interested in buying the breakout point like the 19 high. So a deep pullback, 22, but a tail, probably buyers below, scaling it lower. And then 23 pulls back a little further and traders buy the 19 high during 23. An inside bar, 24, but a doji, probably sellers above, scaling in higher, not really a great bar, and probably buyers not too far below, willing to scale in lower. 25, disappointing for the bears. I think a lot of the bears buy back shorts. You could argue that the tail on 25 was the second leg from 22 and 23. This tail right here. 26 consecutive bull bars. Good for the bulls. We're probably going at least a little bit higher. We're going to break above the high and go a little higher. 27, another bull bar. So 4 straight bull closes. Probably going to get at least another leg up. But this might have, 22 and 23 is strong enough that we might go a little more sideways first. 28, an inside bar, a high one buy, but a doji bear bar. Consecutive inside bars, 27 and 28. So a breakout mode pattern. And the whole thing is a triangle. So we were forming, it's easier if you zoom out a little bit, but we were forming a triangle. So triangles in general, 50-50 chance of the breakout in either direction and 50-50 chance the first breakout fails. And then an outside down bar, 29. You were waiting for a give up bar up here if you were trading, and I think 29 is kind of a give up bar for the bulls, increases the chances that we go a little bit lower. 30, a bull bar, but not really great to buy that. The bulls are hoping that it's failure of the triangle and that we get a large follow through bar on 31. Instead, we get a big outside down bar on 31. Good for the bears, and 31 is good enough for its own second leg. 32, a bull bar closing near its high. So we are going lower, but we're getting too many good-looking bull closes for me to think we're going a lot lower. 30, a really strong bull close. 32, a really strong bull close. And then obviously, I'll get to it in a second, but 36 as well. To me, that just means that it's a little bit less likely that we're going lower or a lot lower. And to me, it means it's a lot more of a trading range than a bear trend. 34, consecutive bear bars, 33, 34. Probably buyers below, scaling in lower. 33 and 34 looks like a third leg down. And then an outside down bar, 35. Probably buyers below. 36, why is there buyers below? Oh, hold on, there we go. Why are there buyers below 35? Because this is the bottom of this bull spike. So this bull spike is going to be support around this low since it's a trading range. 36, it's a double bottom bull flag. 24, 36, maybe 40% chance we break out above this high and get a measured move up. Reasonable to buy above 36, but the problem is you're buying against a tight channel. 28 through 35 is a decently tight channel down, and so we're probably going to go a little bit more sideways before we go up. 37, a bull bar closing on its high, but a large tail. These tails aren't that great. You don't want this much overlap, 37, 38, because it's a bull channel on a lower time frame. With all these reversals down, let's just highlight these two things to show what I'm talking about. On a lower time frame, one of them is probably a pretty perfect bull spike. You can see here, and the other one is a bull channel. So these bars with large tails are usually more of bull channels on lower time frames than there are bull trends. 38, another bull bar, but like I said, closing on its high, good for the bulls. Again, 30, 32, 36, 37, 38, all closing on their highs. So we're probably going at least a little bit higher. 39, another bull bar, but a large tail on the bottom. Not really that great. Again, I think that it's more of a bull channel. And then 40, a lower high major trend reversal. Some bears will sell it and just take a chance that we're going lower. Bulls, probably you can get out, but it's probably also okay to hold. We're still, for what it's worth, I'm not positive that we're of the always in direction here. We might be always in long, and you could argue from this, we're probably always in long, but the gap down, and the bulls are failing. After 29, I think the always in became a lot less clear. 41, disappointing. A doji bar. 42, consecutive doji bars. 41, 42, probably buyers below, probably sellers above. 43, buyers below 42, scaling in lower, and then a bull bar 42, or 44, but it's a doji bar. So not really that great. It just looks like a triangle to me in the middle of a trading range. So probably better to wait. I would imagine there are sellers above, but this should still get some kind of second leg. But the channel down from 40 to 44 is tight. 45, a bear bar closing near its low, probably buyers below, scaling in lower. And then a surprise down on 46, a little bit of a give up bar for the bulls. So you could argue that this is a third leg down for the bears. 1, pullback 2, pullback 3, and 47 is the last gasp, of air for the bulls. Basically, if we break out below 47, it's a little bit more of a bear trend. I personally was too concerned. I made a mistake. I should have sold 58. That's one of my sells in my the signals in the system that I'm trading. But I made a mistake and I did not take it because I was too concerned it was still part of the third leg down. But I think this is where the third leg ended in this tight trading range. So the breakout here is a breakout below a bull flag and an increased chance of some sort of bear measured move down. So 48, 7, a bull bar closing near its high. Disappointing follow through 48. It's a tight channel from 40 to 47. So even if this goes down, even if this goes up, it's going to go sideways first. 49, a bull bar, not really that great though, just looks like a second leg up. And then 50, a low too short, but also not that great because 47 and 49 are touching, closing near their highs. 51, a bull bar, but I would just rather wait at this point. It just looks like three pushes up, and it just looks like a tight trading range. Outside down surprise, 52. Again, better to wait. And same thing, 53, 54. Just a tight trading range. So for me, I'm not doing anything until we get a clear breakout in one direction or the other. 55 consecutive bear bars, 54 and 55. Probably going at least a little bit lower. First time we've had consecutive bars since 45 and 46. 56 consecutive bear bars, 55, 56. Another bear bar, 57, but a doji. So not really that great. Yes, 4-bar micro channel, but I'd rather wait for a little more follow through. A bear bar closing near its low, like we get 58. You could sell the close 58, 59, 60. Again, it's a breakout below a bull flag. So bull flag, bull flag, bull flag, bear breakout. Again, there are signs along the way that it's less of a bull flag and potentially more of a, going to end up being a bear breakout, but a bull flag until proven otherwise. So 59, another bear bar, but a large tail. It's a climactic bear bar, but again, a tail on the bottom. 60, an inside bar, low one short, probably buyers below. 61, 62, consecutive bear bar. So a lot of bear bars, 54 through 62, meaning that we're going to get a second leg down. Basically 8 bear bars in a row. Outside up 63, traders, they sell the close. Why? Because 8 straight bear bars, you're not going to buy this close and expect to make much money. For what it's worth, outside pattern 63, 64, so possibly a final flag, and spike, pullback, 1, 2, 3 pushes down. So we did get 3 legs down here. 66, probably buyers below scaling and lower, but it's a bear channel and we're always in short, not worth it. 67, a bear bar closing near its low, but a second leg down. You can sell below 67 if you want to, stop above here. 68, a bull bar, but a minor reversal. Probably, if you're going to take a buy, you want to take a buy after a climactic sell-off. 68 is one of those bars where you don't buy above it, but you probably want to buy the measured move down instead of buying directly above. These bars are kind of, they make it look like you want to buy because it's a good-looking bull bar. The reality is there's going to be sellers above because the channel down so tight. And then when you get the climactic sell-off, 70, 71, increasing in bar size to the new low, probably not too much more left to the downside. It's okay to be short down here as long as you're willing to exit quickly above the bull bar and you know what's going on. And then obviously we had to buy the close finish, but it's against a tight channel from 40 to 71. So as good as the rally looks up to 77, it's not surprising we got that really deep pullback at the end of the day. As far as stop orders on the day, kind of difficult. The best one is 14, I think. But you could sell these closes. I wouldn't sell the close of 6, but 7, 8, 9 probably makes sense to sell the close. I think it's okay to buy above 14 because bears need to exit, and you could buy these closes. I thought it's okay to buy up here, but you have to be willing to sit through this. You can't, it's okay to buy up here so long as you don't mind sitting through a 15 to 20 bar pullback and just holding, basically. But if you're gonna, get stopped out somewhere down here, then you probably can't take the buy. You could probably take the buy above 36 or 37, 38 and get out somewhere over here. And you can start selling. I probably wouldn't sell in here. I would probably wait till this finishes up and then fails above the moving average. And then you could start selling these closes. As far as the best limit order trade on the day, probably buying below 17. The daily chart, just a tight trading range. So maybe upside breakout, maybe downside breakout, but either way, just tight trading range. What would convince me of either thing? Well, I'm going to turn on the Globex just because it's just a cleaner chart. So you can see, though, it's a clear tight trading range. What would convince me of either thing? Well, if we get a breakout above this high and a follow-through bar, we might go higher. If we get a breakout below the moving average and a follow-through bar, we might go lower. But when you get those 2 consecutive bars, so let's say we get a bear bar tomorrow, you have to look out for an abrupt reversal because 50-50 chance the first breakout fails. The weekly chart, you can see we rally back to around the close of this bar, 61.65. The high of this is 61.63.75. So we got back up in that area and found sellers. And like I mentioned, the monthly chart is awfully small. Just look at this too. This is another good point. The yearly chart, that's really climactic bar. So we might go a little bit higher, but this is obviously a very, very climactic bar. And again, these very climactic bars in general, obviously it's a yearly chart. So take it, you don't have to take it at face value with climactic bars because it'll be in an infinite bull trend for the rest of my life and the rest of your life. But for what it's worth, these bars usually the lows get tested. I still, like I've mentioned, I still think we're going back to 5,000. I've mentioned that before, though. But I was saying the monthly chart, obviously, the bar is extremely small, right? We only have a 127 range bar. This is 335, 203. So really, really small bar, which would be unusual, be the smallest month we've had since, if this holds, 127. I don't even know. So this was a little bit bigger, but April 2023. So in over a year, coming up on 2 years, it'll be the smallest month we've had. So something to consider. The smaller the months are, the more. I was actually looking through. So with my particular system, it struggles in the really small months, and it was struggling in these months over here. So I actually thought that was kind of interesting when I was back testing over here. But anyways, all right, that's